It's something most of us do every single day without even thinking about it. Paying with a credit or debit card. It feels completely instant, right? But behind that simple tap or swipe, there's this incredible global system working at a speed that's, well, it's honestly pretty hard to believe.
But have you ever actually stopped to wonder what's going on in those few seconds? I mean, in less time than it takes you to blink, a request for your money gets encrypted, shot across the country, checked against your account, approved, and sent all the way back to that little terminal. It really does seem like magic, but it's not. It's actually a highly organized symphony of technology and finance.
For most of us, this whole process is a complete black box. Your card info goes in, an approved message comes out, but that journey in the middle is a total mystery. So our goal today is to open up that box. By the end of this, you'll have a really clear picture of all the key players involved in every transaction, and you'll know exactly what role each of them plays.
To get us there, we've got a clear roadmap. First, we'll introduce this whole idea of a payment ecosystem. Then we're going to meet the major players, the two different banks that are involved, the networks that connect them, and the tech that makes it all easier. Once we know who's who, we'll follow a single purchase from the very beginning to the very end. And finally, we'll talk about why this system is so important for how we all live and shop today. So let's start with this idea of an ecosystem. It's really the best way to think about it. It's not just one company moving your money from A to B. It's actually a whole network of separate partners, each with a very specific job, all working together perfectly to make sure your payment is fast, simple, and, most importantly, secure. Okay, so at the very center of this ecosystem are two different banks. And, this is the first big surprise for a lot of people. It's a really common misconception that only your bank is involved in your purchase. But in almost every single transaction, there are actually two financial institutions working behind the scenes. One is called the issuer, and the other is the acquirer. First up, let's talk about the issuer. The easiest way to remember the issuer is that it's your bank. They're the ones you have a relationship with. They issued you that physical card in your wallet, they manage your bank account or your credit line, and they're the ones who send you a statement every month. In any transaction, their main job is to represent you and your ability to pay. They're the final say on whether, yes, this person has the funds, or nope, they don't. They're the ones taking on the risk that you'll pay your bill. Now, on the other side of the transaction, we have the acquirer. So if the issuer is your bank, the acquirer is the merchant's bank. This is the financial institution that the business owner, like your local coffee shop, has a partnership with. The acquirer gives that shop the ability to accept credit cards. It processes all their incoming payments, and it makes sure the money from your coffee eventually lands in their bank account. The acquirer also takes on the merchant's risk, handling things like disputes or chargebacks if a customer claims a transaction wasn't legitimate. So let's just put them side by side to make this crystal clear. The issuer works for you, the cardholder. It gives you the card and it vouches for you. The acquirer, on the other hand, works for the merchant. It processes their sales and makes sure they get their money. This two-bank system is really the bedrock of the whole thing because it separates all the risks and the responsibilities. It creates a natural system of checks and balances. Okay, so we have two different banks. They're often on opposite sides of the country, and they need to talk to each other in a matter of seconds. So how do they do that? I mean, it's not like they have a direct phone line to each other. Instead, they communicate through a super important middleman, the card networks. You know these names by heart: Visa, MasterCard, American Express. These are the card networks. A really great way to think of them is like the highways or the railroad tracks of the payment world. They don't actually hold your money, and they don't issue you a card. What they do is build and maintain the secure, high-speed infrastructure that lets the issuer and the acquirer talk to each other. They also set all the rules of the road, all the technical standards, the security measures, and the procedures that every bank has to follow to even be a part of the system. Now, while the banks and the networks make up the core system, there's this whole other layer of technology that's been built on top to make everything safer, easier, and just more accessible, especially for small businesses and online stores. And this is where we meet two more players: payment gateways and aggregators. Think of a payment gateway as a digital armored truck. I mean, when you type your credit card number into a website, you definitely do not want that merchant just storing that sensitive info on their own computer, right? Well, the gateway's job is to securely grab that information at the exact moment of the sale, scramble it into an unreadable code, that's encryption, and then transport it safely over to the acquirer. This is absolutely vital for security. So what about all the small businesses out there?
In the past, for a little shop to get a direct account with an acquiring bank, it was a really complicated and expensive process. Well, payment aggregators like Stripe and PayPal completely changed all that. What they do is they set up one giant master account with an acquirer, and then they let thousands of small merchants process their payments through that single account. They simplify everything, bundling the gateway, security, and processing all into one easy-to-use package. It's what makes it possible for pretty much anyone to start accepting payments in just a few minutes. All right, so we've met all the key players. You've got the issuer, the acquirer, the card network, the gateway, and the aggregator. Now let's put it all together and actually see them in action. We're going to follow the path of one single transaction from start to finish. It all starts the second you tap your card. In that instant, your payment details are captured. This first part is called authorization. Your data is immediately encrypted by a gateway and sent to the merchant's bank, the acquirer. The acquirer gets this, adds a little bit of info about the merchant, and then sends an authorization request out onto the card network's rails. Let's say it's Visa's network. Visa's system instantly knows which bank issued your card and routes that request directly to them, to the issuer. Now your bank gets the request and does a lightning-fast check. Is the card valid? Is there enough credit or money available? Any red flags for fraud? And based on that, it makes a decision, approved or denied. That single word, approved, is sent all the way back along the exact same path, from your bank, through the network, to the merchant's bank, and finally back to the terminal on the counter, which beeps and prints your receipt. That whole round trip takes about 2 seconds. But, and this is the crucial part, no money has actually moved yet. That happens later, in a process called settlement. Usually overnight, all of the day's approved transactions are bundled up, and the issuer actually sends the funds to the acquirer, who then deposits that money into the merchant's account. When you really understand that 2-second approval and the next day's settlement, it shows you just how incredible this whole system is. Its speed, its security, and its reliability, they aren't just about convenience. They're actually a foundational pillar of our entire modern economy. So just to recap the 5 key players one more time. You have the issuer, that's your bank. The acquirer, that's the merchant's bank. The card network, that's the highway connecting them. The gateway, the secure digital doorway for the data. And the aggregator, the service that makes it all simple for small businesses. Each one has a very specific job in that lightning-fast journey. Honestly, without this complicated dance happening invisibly behind the scenes, the world as we know it would just grind to a halt. Global e-commerce couldn't exist without the trust that a payment you make to someone halfway around the world will go through instantly and securely. The whole subscription economy, from streaming services to software, it all relies on this system. It's what empowers all of us to go about our lives with that simple, trusted convenience of just a tap to pay. Now that you can see the whole picture, from start to finish, I'm really curious. What part of this whole process did you find the most surprising? Was it the fact that there are 2 separate banks involved? Or maybe the difference between that 2-second approval and the money not actually moving until overnight? Go ahead and share your thoughts in the comments. I'd be really interested to read them. If you found this breakdown helpful, please give it a like and subscribe for more content where we make complex topics clear and simple. And of course, if you have any questions, feel free to ask. Thank you so much for watching.